There's a lot of noise out there in the marketplace right now. CNBC, market in turmoil every night. Everybody having a say about this or that. We went down because of this. We're going up because of that. And, you know, from the stock pimps, where are they all now? Remember Grasso telling everybody to buy the housing stocks? How did that work out for you? Or how about everybody, remember back a month ago, oh, this market's not going to dip. And if it does dip, it'll only be for 3 or 4%. And, and it'll be a buying opportunity. Okay. Where are they now? How's that working out for you? I'm not going to repeat any of the garbage. That's not what we do here at StockMarketCaddy.com. Again, I'm bagged on. It's February 9th at about 11:52. We put out a sell call with our Nicholas timing model that is still in place. It is still in place. We put it out on January 23rd specifically and confirmed it on January 24th. One contract in each of the four major markets and including the VIX had a high water mark of $72,500. The swing machine itself is now, because we have a little longer term model, more stable model. See, the Nicholas is meant to give us these short, usually short duration trades in either direction. And it's a bit long in the tooth. But let me share with you what we share with our subscribers, and I'm going to try to do this. I need to do this in less than 10 minutes because of YouTube. If you're watching this on YouTube, it might be best you put it in high definition. I always forget to say that. Our videos that we send out to our subscribers, we pay for the hosting service, and it's high definition video. And for members who are trading with us intraday, they get to see and trade all the same signals and indicators and strategies and everything that we have. But let's take a look and see exactly just where we are. This is what we call the swing machine, and it's giving us information on the VIX complex. The first hint of trouble on the spot VIX that you're hearing everyone talking about, that's not the VIX Vapo Rub, it's an indicator, was risk off 19 days ago on January 16th. January 16th. And then our timing model, the Nicholas timing model, also picked up on that because see, we have a timing model that is you can't really discern the information off of a chart because it computes the math of the indices, the math of the VIX, the math of the 10-year bond, and tells us what we need to be doing when we need, what we need to be doing and when we need to be doing it. Has an excellent 20-year performance record, and that's where we take our cues from. But also here, if you look, the VIX futures contract went risk off 8 days ago. Okay, so this one went off on January 16th, on January 31st. Now this is the one where we actually blew the siren, the proverbial siren, just like when you have lightning out on a golf course, you hear the siren call, and that was telling everybody to get hunkered down, to stop buying stock, to begin getting puts on if they hadn't already. It was an opportunity to protect your portfolio because we were going to have a storm. We just didn't know how deep and how quick. We report on the VXX, but we don't take any indication from here. But we do. This is the volatility index, and what they're not discussing with you is that there's like a 5-day volatility, a 30-day, a 90-day, and a 180-day, and all of them are telling us risk off. Okay. And they told us this some 19 days ago, January 16th, January 16th, January 17th. Look at this, January 23rd. Now, that doesn't necessarily mean that this is going to continue for the next 6 months. It could. It entirely could. We're not about forecasting. We're not about predicting. We're just about reading our indicators in much the same way that a pilot will look at his technical gaugers when he's flying into San Francisco in the fog to get the plane safely on the ground. The yen also is a barometer of risk on, risk off, and that was risk off 22 days ago, January 10th. See, while everyone was, fat and happy and yelling booyah, booyah, we were hunkering down. We were trying to tell people. Some were listening, some not. Some were throwing brickbats at us and ridiculing us, but that's no problem. And then the gold contract, we actually have a risk off caution. It looks like gold wants to pull in right now. And then the skew index, this is a day late. And this tells us when everyone is all lathered up and buying calls. This was when all of this was going on. The skew is at 117. And when the skew is below 120, that tells us for sure that we want to be buying puts. And when the skew is over 130, which this is a day late, so it'll update tonight, probably could be at 140, 150. That also tells us that now we're a little bit long in the tooth. Long in the tooth. What does that mean? Let me disregard that. That's just an order populating. Let me show you. I don't have only but a few minutes here, but let's zero in. This is the swing machine. You're getting a glimpse of it. This tells us our trade purse, how much we're up or down, and this also tells us whether we want to be short. So you can see on all of the four major markets, a swing machine has now gone short. Now that doesn't mean that we're not going to get significant bounces and rallies into a short position, in much the same way that when you're long, you can get dips. The difference is, if you don't know the difference between the two, in a rally you want to be buying the dips. In a downtrend, you actually want to be selling the rips. And we're actually expecting there to be a rip pretty soon. And let me just come here to the ES contract. She's right now trading at 25.71.72. And why do I say that? Well, I don't have enough time to explain everything here on our gauges, but what we're looking at right now is on the ES contract. The second cut low, which is tremendous level of support, is lighting up right in here. She has moved from this extreme now down to here. This is a predictive area of support for the daily, weekly, and monthly view of the markets. And the average of these right now is 25.80. So everyone is going to be getting lathered up and getting really, really nervous here. And we think that 90% of this initial corrective move has been completed. Now we could be wrong, but we think it has. So we're not putting on our puts. We're not shorting the market now. No, what we're doing is we're actually ringing the cash register and preparing to go the other way, because we're traders. We don't get married into a position one way or the other. And in order to close our shorts, we actually have to buy the market. So we're actually now closing out and ringing the cash register, making money so that we can go buy something tangible like gold, like real estate, or what have you. That's the way, unfortunately, the way the markets work. And we would expect there to be, over the next day or two, we may not have it perfect, maybe later today, that will rally off of this area. And then we're going to come back up, and we're going to come over to this dynamic range. And we might get to the second cut high, first cut high, and then we would expect the market again to, in all likelihood, continue with the trend that has been established. And what is that trend now? That trend is down. Okay? That trend is down. But that's what we're seeing. We may, sometimes we get early. We may be a bit early. But if this sort of approach to the markets appeals to you, you can see that we never even looked at a chart. Feel free to give me a call. Feel free to follow us. Feel free to subscribe. It's month to month. And I'm Bag of Dawn at StockMarketCaddy.com. And now is not the time to be buying the insurance for your portfolio. It's late, and the market will be bouncing in the very, very near term. That will give you that opportunity to get insurance on your portfolio if you like. And for the real aggressive trader, if you're subscribing to us, you're probably going to get a much more precise opportunity to short the markets if that's something that interests you. We don't give specific recommendations to buy or sell. We just show you the models that we're looking at and what we're preparing to do. But everyone is, as a member, not only entitled but is encouraged to play their own game. I'm Bagadon at StockMarketCaddy.com. My cell is 813-758-8263. Thank you.